U.S. suspends contributions to the World Trade Organization, a major shift in global trade. The United States has recently made a groundbreaking decision to suspend its financial contributions to the World Trade Organization, WTO, a move that has triggered global discussions on its economic and political implications. This decision aligns with the U.S. government's broader efforts to reevaluate its role in international trade, reduce federal spending, and push for reforms within the WTO. Given the significance of the U.S. in the global economy, this action could have far-reaching consequences for international trade relations, economic stability, and the functioning of the WTO itself. Background of the decision: the WTO, established in 1995, serves as a global body responsible for regulating international trade, resolving disputes, and ensuring fair trade practices among its 164 member countries. The United States has historically been one of its largest financial contributors, providing millions of dollars annually to support its operations. However, recent political and economic shifts have led the U.S. to reconsider its financial commitment to the organization. Key reasons for the suspension: several factors have contributed to the U.S. decision to halt its contributions to the WTO. Financial and budgetary concerns: the U.S. government is currently prioritizing domestic economic policies, including infrastructure development, tax cuts, and social welfare programs. As part of its effort to reduce federal spending, cutting contributions to international organizations like the WTO has become a strategy to reallocate funds to domestic priorities. Concerns over WTO effectiveness: the U.S. has long been critical of the WTO's effectiveness in handling global trade disputes. American officials argue that the organization has failed to prevent unfair trade practices, particularly by China, which the U.S. accuses of engaging in state-sponsored economic policies that distort global markets. Push for WTO reforms: the U.S. has demanded structural reforms within the WTO, arguing that the organization is outdated and in need of modernization. The government believes that withdrawing financial support will pressure the WTO to implement reforms, including changes to its dispute resolution system and stricter enforcement of trade regulations. Shift toward bilateral trade agreements: the U.S. has increasingly favored direct, country-to-country trade agreements over multilateral organizations like the WTO. The government believes that bilateral agreements provide more flexibility and better outcomes for American industries. Potential consequences of the suspension: the decision to suspend U.S. contributions to the WTO is expected to have both immediate and long-term consequences on global trade, economic stability, and diplomatic relations. 1. Increased trade tensions: by pulling financial support from the WTO, the U.S. risks escalating trade tensions with major economies, including the European Union, China, and other key trading partners. Countries that rely on WTO mechanisms to resolve disputes may perceive this move as an abandonment of global trade rules, leading to increased protectionism and retaliatory trade measures. 2. Weakening of the WTO's functioning: the U.S. has been one of the top financial contributors to the WTO, and its suspension of funds could significantly impact the organization's ability to operate effectively. The WTO relies on member contributions to support its dispute settlement system, trade negotiations, and research initiatives. Without U.S. financial backing, the organization may struggle to fulfill its mandate. 3. Uncertainty for American businesses: many American businesses, particularly those involved in international trade, depend on the WTO to protect their interests in foreign markets. With the U.S. reducing its involvement in the organization, American companies may find it more challenging to address trade disputes and secure favorable trade terms. This uncertainty could lead to increased costs and reduced competitiveness in global markets. 4. Potential shift in global economic alliances: the withdrawal of U.S. financial support could encourage other major economies to take a more dominant role within the WTO. Countries like China and the European Union may increase their influence within the organization, shaping global trade policies in ways that do not necessarily align with U.S. interests. This shift in power dynamics could lead to new trade alliances that sideline American businesses. International reactions to the U.S. decision. The decision to suspend contributions has sparked strong reactions from international leaders, economists, and trade experts. European Union. The EU has expressed concern over the U.S. move, emphasizing the importance of a rules-based international trading system. European leaders fear that the decision could weaken global economic stability and lead to increased trade conflicts. China, one of the WTO's most influential members, has called on the U.S. to reconsider its decision. Chinese officials argue that the WTO plays a crucial role in ensuring fair trade practices and preventing economic instability. WTO leadership. The Director General of the WTO has warned that financial instability within the organization could delay critical trade negotiations and disrupt the dispute resolution process. WTO officials are urging the U.S. to engage in discussions to find a solution that maintains American involvement in global trade governance. Possible future scenarios. As the situation develops, several possible outcomes could emerge. WTO implements reforms to appease the U.S. If the WTO responds to U.S. concerns by implementing structural reforms, there is a possibility that the U.S. may reconsider its decision and reinstate its financial contributions. This outcome would require significant negotiations and compromises from other member states. U.S. fully withdraws from the WTO. In a more extreme scenario, the U.S. could take further steps to disengage from the WTO entirely. This move would have profound consequences, leading to a complete restructuring of international trade policies and the formation of alternative trade agreements. Increased influence of other economic powers. With the U.S. reducing its financial and political involvement in the WTO, other countries, particularly China and the EU, may take on a more central role in shaping global trade regulations. This shift could lead to trade policies that favor non-U.S. economies. Trade disputes escalate outside the WTO framework. If the WTO becomes weaker due to financial constraints, countries may increasingly resort to unilateral trade measures, tariffs, and economic sanctions rather than resolving disputes through the organization. This shift could increase global trade instability. Conclusion. The suspension of U.S. contributions to the WTO marks a significant turning point in international trade relations. While the decision aligns with the U.S. government's goal of prioritizing domestic economic interests, it raises critical questions about the future of global trade governance. The coming months will be crucial in determining whether this move will lead to meaningful WTO reforms, a decline in multilateral trade cooperation, or the rise of new economic alliances that reshape the global trade landscape.